General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay. Man, let's see. Tuesday. I don't know what I just did. Control Z. Control Z. I don't know. 8.9. I need the screen grabber. I always forget that. Forex Factory. Okay. FOMC minutes. So PM news. FOMC minutes. PM news. See the CME Fed watch. Let's do this. So we had an 84% chance for a rate cut. Word on the street is they're trying to put it in stone. 84% chance for rate cuts. Now the news guys are leaning towards rate cuts too. I'm skeptical. Not because the data says it's good for rate cuts, But the reason the Fed watch flipped two rate cuts in the first place. The flip was because Trump put tariff on India for doing business with Russia, who taking over Ukraine. Now, I ain't capitalized none of this, so it's going to say all that's misspelled. But so if that gets resolved before September 17th, then we could easily go back to 30% chance of rate cut. Those jobs we lost, turns out, were government jobs, and the economy is fine. It's crazy. Okay, it didn't make me capitalize Trump. That's very democratic of a notion. Y'all know Trump is a Trump is a actual word too. Like you can trump somebody. It's really nothing good. Walmart is a good company, and Home Depot is a good company. It's just nothing's really moving the market. Hold on, let me get it correct. Home Depot, Target. Target's not a market mover. Walmart is a big deal. Home Depot is a big deal, but it's not a NASDAQ mover. It used to be. Nothing here to move NASDAQ. Boom. Dollar on the daily. Okay, I'm pushing up on the dollar. So it's nothing. Nothing's going on here. Hold on, Control Z. I need the link. There we go. Update on the dollar. Not significant. Due to no real driver. News driver. We need order flow on this daily. We're not doing anything, not creating no fair value gaps. Then nothing is going on. This is nothing. Not significant due to no real news driver. We need displacement to get excited. Simple as that. I remember yesterday I had trouble with spacing these things. Okay, down day on the dollar, came back into the old range. Down day on the dollar, or down day on the NASDAQ. Price just came back into the old range. I seen something about Nvidia. Shares after leading designer of graphic chips fell, took some profits off the table as markets awaiting signals of future monetary policy from Federal Reserve Jackson Hole Symposium later this week. Okay, what happened? So this is what they're saying. They are saying happened. Um, this is Yahoo Finance. Okay. Now, we know it needed to retrace, being at all-time high, leaving sell-side liquidity. But if Jackson Hole does this on a regular basis, it is something to note. Okay. Weekly. Weekly did what it had to do. We still got here to go. Weekly can focus on liquidity pool at 227780.25. Go to the daily and seeing how the dollar pushing. This is where we want to go. So we just want to sell now. I still don't like that high up there. Let's put this here. That's our next target. Let's put some anchored text here or something. I thought I had I don't know, I'll be changing this thing up so much. Yeah. Need to figure out how to annotate this and not have it looking crazy. That's huge. Okay, that's better. Okay. Looking to sell retracements. Bias is set and weekly objective is set. Target for Wednesday is 22 bam 045.25. Let's go to H4. Undo. Well, this can be a breakaway gap. H4. Let's take this off. Monday's high still untapped. I kind of like this volume imbalance here too. Any gap, really. Look at this. You know what? I was going to say this looks like a flat top, but I don't think it is. What time is this candle? 14. It's kind of inefficient. I want to sell retracements. Here would be ideal to target here. Let her retrace after here. Don't chase though. I'm like waiting for a H4 fair value gap retracement. Maybe London high of the day. New York retracement. I prefer London now. Get in, go to sleep, and just swing the trade. It's H4. This is the 1 hour right here. This is the start of the day. This is going to be important. Let's put the arrow on here. No, not that one. Yeah, this will work. Oops. Stats. What's this? What is price percent bar state time distance angle? Yeah, I want to sell above daily open. I want to sell. I want to sell this breakaway gap. I want to sell. This is daily open. I'm gonna set an alert for the daily open. I want to sell above daily open price. Right now, this candle really don't got no wick. Oh snap! Come on. Okay, there we go. Control, bam. I want to sell above daily open. Right now, we barely have a wick. So, ideal delivery would be London retracement. If we, or London high liquidity run, if we continue falling, the only thing left in New York would be wait for a retracement, or it would be about a sell. Let's just put NY. And then, let's do this. Price above daily open. Okay, let's say daily open. And then I don't need to do gold and EU right now because we're retracing. Yeah, we can chill out. The lower the better because the targets are high. Could this be higher low of the week though? Monday, Tuesday, Wednesday. Let's take this off. And then let's take this and see what we got here. Eight, 19, 25. Okay. Could be Wednesday. Midweek reversal. Nevertheless, we wait on the weekly anchor point to start buying in the direction of higher time frame order flow. So we just wait. Let it do what it's doing. After it starts anchoring, we start buying. So we're waiting on that. And then here, 819. This is silver. Okay, it's taking its time. Okay, same here. We wait for the correction to be over. We're buying this as much as we print money. This is a fundamental buy with the way the U.S. is printing the dollar. Okay. All right. That's that on that. Y'all have a good day. Peace.